Okay, so I went ahead and got in this trade. Uh, Thought I'd hit record because we have some setups that might be happening. We'll see if they take shape. But so I'm short. I've got my typical three, and there's a trade. So I'm gonna pull my crosshairs. The midpoint, which is the red line right in the middle of the box, price tends to want to come back to this line here. So what I'm doing is putting a limit order in with just one contract. And so essentially I'm adding to my position here. And you can see if we go back one trade to this prior box, this long position, you can see how price came back to the midpoint. And if we look back to the box before that, this short and this long both lost. But forget about that for a second and look at price coming back to this price level. So the short, it came back to the midpoint, and then this long, obviously, it came back, and then we had this short. So it's kind of back and forth, and then but look at what happens here. Price comes back to the midpoint on this short position, and then it runs. So the reason why I'm short right now is because the prevailing trend is down. Okay, so the box is pretty simple. We have a box. It gives us an opportunity. Arrow shows probability of direction, but in some cases requires smarts. Let me just really quick here. I'm going to go ahead and enter in, or so you can see the my trade entries just for a visual. But anyways, what I was saying is that the box is very straightforward. The box tells us that there's a trade that's forming, gives us an opportunity. In other words, a heads up. So if we like what we see, we can get ready and get into the trade. The arrow tells us the most probable direction. And then the dotted lines are profit levels that essentially what they say is that, at these price levels, it's very possible that price will pause there. They could bounce there, as you can obviously see. So it might be a good idea to take profit there. Now, it doesn't mean that you have to take profit at any one of these levels. It just gives you kind of a guideline to go off of. So market's not really moving too much right now. It's very slow. I'm going to pause this, and then as soon as it speeds up, then I'll come back. Okay, so we finally had a pop in volume. Well, more than what we had. It's still moving kind of slow, but hopefully this will come and fill me. You can see here that these three bars got one tick away from my sell limit order. Even though it didn't fill me, it's a really good example to show how price will want to come back to test this midpoint, this red line. So that's a lot of traders that use this tool will use that as a separate trade. If you look back to this morning, you can see that the prevailing trend has been down, and so we've had this retracement of sorts. And so at this point, what I'm anticipating is that the market's going to continue to drop. How much? I don't know. I've got my last target at this green line here, but I'm not looking to get every single movement that happens in the market. I'm just looking to, take profit, here if it can fill me.
Target
here we go.
filled.
And, if it continues down, then, I want to take advantage of that. So you can see how this tool can be very advantageous to traders that follow trend. So like this long here, this trade, although we got a signal, it's contrary to the trend. This long down here, contrary to the trend, but at what point are we going to become overextended? So while I'm thinking about it, I'm going to bring up time because I know there's a lot of people. Are you doing this right now? Is this recorded? So here we go. We are at 10:37 my time. So you can see here, Denver, I'm in Mountain Time Zone, 10:37. And we just flipped to 10:38. So there you have it. For all you skeptics out there. But, let me get rid of that.
Order canceled.
I wanted to make sure I didn't have that there anymore. So at some point, this is part of trade management. I attempted to get in short there on that off that red line, and obviously didn't fill me. So there's no reason if the market develops and it doesn't. In fact, I should have got rid of it after it filled my first order because I don't want it to all of a sudden change direction. But if you have an order in and the market develops in a way that it's not going to come and fill your order like you just saw there, then there's no reason to leave it in. One of the worst things you can do is leave orders in and then you're shutting down. And most software is pretty good. It'll notify you that you have orders left in, and it'll ask you if you want to keep it open. But sometimes there's nothing worse than leaving an order in and then shutting everything down, and then you open it up for the next day, the next morning, and you're in a trade or you're down, or if you got lucky you were up. But just make sure you're paying attention to that. So we hit this yellow line here, this profit level. Obviously I could have, should have, would have took that, didn't, but hoping that we can come back down and fill me. Right now in real time, I'm just going to leave everything alone. I'm not going to change anything. I'm leaving my stop where it's at. I probably should move it, but I'm not going to move it quite yet. I just want to see if we can get another push past this yellow line, then I'll end up moving my stop, but we'll see. Let's just see how this develops. So I had to pause it again. It was kind of dead. So we've broken through, and I'm going to wait for just a sec to see if this is going to hit my target. We got a couple ticks away, but in the meantime, I'm moving my stop to that green line. So at any point, you can do whatever you want to do. Some people use trailing stops. I particularly don't like to. If I'm going to manually trade, I don't particularly like to use trailing stops unless we have markets like 2008. Then that's just me though. If you like trailing stops, then obviously you can do that. I like to manually move my stops if I'm going to. So at this point, I've secured a point of profit with my stop. So if it comes back, then I'll snag a point. And some of you might be thinking, well, why don't you just get out right now? Well, we got 2 ticks away from my last exit, and I like to see how trades work out. I don't particularly, if I've made a decision, I like to commit to my decision within reason. If this comes back up, fine, I'm okay with a point on that last position. We'll see what happens. It's possible it just was a quick burst, and if it dies down again, then I'll pause it again, but we'll see. I went ahead and paused it again. It was just not going anywhere. We got really close to hitting my exit again. Not as far as the first dip there, but I'm moving my stop closer. So now I have 2 points. So if this comes up, I'll take 2 points. We're a couple ticks away from that now. So anyways, I'll take 2 points on that last exit, and I'm still hoping that we'll get down there, but it just doesn't want to move. So I'm going to go ahead and, well, no, I'm just going to let it sit. I was going to say I was going to pause it, but this is really boring to watch. Okay, so one tick now away from my stop, which is now profit, which is of course always nice. And
stop filled.
Okay, well, I'm glad it's over. But that should give you a really good idea how that works. There's a lot you can do with it. If you just keep it simple and you apply a couple rules, then you can do really well. So in the next video, I'm going to show, I'll go ahead and pull up the statement so that you can see each of these individual trades that you watched. And then that way I obviously can, give you some credibility behind the performance of these trades and, back it up with actual numbers.